Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. So let's start with the number one core CPI month over month, and the country is the USA. The currency pair is the Euro USD, the Euro dollar currency pair. Okay. On Wednesday, June 11th, 2025, the core CPI inflation report. This is what we got. And the next one is the June 12th gross domestic product GDP month over month for the UK. The currency pair is the GBPUSD pair. So let's start with the core CPI. What is the core CPI month over month or M over M? The core CPI stands for Consumer Price Index or the core CPI. Month over month or M over M measures the monthly change in the average price of a fixed basket of consumer goods and services, excluding food and energy due to their volatility. This makes it a more stable gauge of inflation trends and a crucial tool for understanding underlying price pressures in the US economy. The core CPI is closely watched by the Federal Reserve. A high reading typically increases the odds of interest rate hikes supporting the US dollar. A weaker reading may raise expectations of rate cuts, weakening the US dollar and potentially boosting the Euro USD pair. Now, the previous number we got is 0.2%, the forecast was 0.3, and the actual number we got is 0.1%, and it's in red because it did not meet the expectation. Markets were expecting a slight increase in core inflation, but the data came in well below forecast. This weaker than expected print suggests cooling inflation, increasing speculation that the Fed may consider rate cuts sooner than later. Now, the market impact and the reaction that we got on the euro dollar is the actual core CPI was lower than the forecast. We got the 0.1% number. So this signals inflation is cooling faster than expected. So it raises the probability of monetary easing by the Fed later in year 2025. So it also, weakened the US dollar and triggered an upward move in euro dollar currency pair. Let me show you the chart of euro USD. So this is what we got on June 11th. Euro USD actually rallied up. Okay. So market basically, rallied up after the news announcement. So the June core CPI report has shifted sentiment towards a more dovish outlook for USA monetary policy. With inflation coming in below expectations, traders are now more confident in the possibility of rate cuts this year. The move up in Euro USD reflects this change in sentiment and the weakening dollar. The key takeaway for Euro USD is that lower than expected core CPI, the US dollar weakness, and Euro USD is moving up. As always, attention now turns to upcoming comments from federal officials and the further inflation data to confirm whether this soft reading marks the start of a broader disinflationary trend. So the conclusion is the core CPI release on June 11th surprised markets with a softer 0.1% print below the zero point 0.3 forecast. This has put downward pressure on the US dollar and lifted the euro USD currency pair. The data reinforces the view that inflation is losing momentum, potentially setting the stage for the Fed to adjust its policy stance in the coming months. Next one is the GDP, gross domestic product, month over month in the UK. So on Thursday, June 12th, 2025, we got this GDP report. Now, what is GDP M over M? The gross domestic product GDP month over month measures the monthly change in the total value of goods and services produced in the United Kingdom. As a key indicator of economic health, it reflects the pace of business activity and overall economic growth. A strong GDP reading often leads to increased expectations of rate hikes from the Bank of England, supporting the British pound. In contrast, a weaker GDP print usually signals economic softness and may fuel dovish sentiment, putting pressure on the GBP pair. Okay, so the previous number was 0.2%, the forecast was minus 0.1%, and we got minus 0.3%. That's why it's written in red color. So what we got is the actual GDP figure came in worse than expected, showing a monthly contraction of minus 0.3%, deeper than minus 0.3% forecast. Now, surprisingly, however, the GBP USD moved higher following the release, defying typical market logic. Let me show you the chart of GBP USD currency pair. This is the chart of GBP USD currency pair. So over here on 12th, GBP USD actually rallied up after the news. Now, the actual GDP was weaker than the forecast. We got minus 0.3%. Normally, this would raise concerns about the UK economy and weigh on the GBP. However, the GBP USD currency pair moved up, possibly due to broader US dollar weakness, technical buying, or market positioning ahead of the release. Traders may have already priced in a negative figure and saw the drop as a buying opportunity amid dovish Fed expectations and upbeat regions in related sector. So overall analysis is that despite the disappointing GDP print in the UK economy, the GBPUSD strengthened. It moved up, indicating that broader market dynamics, not just the headline GDP number, were in play. This includes factors like US dollar movement, cross asset flows, uh, and a shift in rate expectations. So the key takeaway for GBP USD is stronger than expected GDP, normally bearish for GBP, but this time GBP USD rose up. Market reaction likely driven by external forces such as US dollar softness or technical levels. So traders should also examine other data released alongside GDP, including sector specific outlook and revisions to previous figures, which may have influenced the sentiment. So the conclusion is that the June 12th, 2025 UK GDP report surprised markets not with its data but with the reaction itself, the actual market reaction or the price action that we got. While a minus 0.3% reading confirms a contraction in UK economy, the GBP USD still moved higher, suggesting that traders were looking beyond the headline figure. Whether this is a short-lived rebound or the start of a new trend depends on follow-up data and how the Bank of England responds to signs of economic weakness. Now, the way I see, I do expect a top and a drop in price action inside GBPUSD currency pair. I will talk more about it in a minute. Let's check out the previous week global market trends. So the first one is the euro dollar, and then we have the US dollar versus Swiss franc currency pair. Let's take a look at euro dollar currency pair. Now, regarding the euro USD currency pair, I expected price action to continue the rise. So we got this bullish breakout right up here. Market is after that, just going sideways. It might move up a little bit more and even takes out this high as well. Or another idea is price action is going to drop from current level. If that's going to happen, then we want the price action to first breaks below the support level right over here, 1.1371 level. So if market breaks this level, the chances are price action is going to drop more. Otherwise, to me, it's just an uptrend going on inside the euro dollar currency pair. Next one is the US dollar Swiss franc. Now, this is a clear downtrend going on. I do expect some sideways price action. So in daily time frame, we got a drop in price action. It did not print a new low, but we have this green color support zone or buy zone over here, which suggests that the USD Swiss franc is most likely going to rise up from current level. It's also possible, but we need a breakout. So some sort of a bullish breakout is required. So let's say once market breaks above 0.8242 level, then the chances are price action is going to rise up more. Otherwise, we could still get further weakness in price action of US dollar Swiss franc currency pair. Okay, next, let us take a look at current week of macroeconomic events and data releases. The first one is the gross domestic product GDP Q over Q, meaning quarterly, and it's related to New Zealand dollar versus United States dollar. The data is going to be released on June 18th. The next one is the official bank rate in UK, and the date for the financial release is June 19th. Okay, so what is the gross domestic product QQ in the NZD USD currency pair? Okay, the gross domestic product related to New Zealand measures the quarterly change in the total value of all the goods and services produced in New Zealand. As the primary indicator of economic performance, it plays a critical role in shaping market expectations and Reserve Bank of New Zealand policy direction. Now, a stronger than expected GDP print uh, supports the New Zealand dollar, the NZD. suggesting healthy economic momentum. A weaker reading, on the other hand, could signal a slowdown and raise expectations of policy easing, putting pressure on the New Zealand dollar. Now, on June 18th, GDP report expectations is the previous number we got is 0.7%. The forecast is also 0.7%. The actual data did not release yet. The market expects Q1 GDP growth to remain steady at 0.7%, matching the previous quarter. This would indicate a stable economy despite global uncertainties and shifting commodity trends. Investors will closely monitor this report for signs of either resilience or emerging weakness. So the possible scenario and impact on New Zealand dollar versus US dollar currency pair is if GDP is higher than forecast, meaning if we get greater than 0.7% number, this signals stronger than expected economic growth and boosts the confidence in Reserve Bank of New Zealand maintaining or tightening policy. And this is, likely to support the New Zealand dollar and push the NZD USD currency pair higher. Now the NZD USD is already going up. Let me show you the chart. Here's the daily time frame. Price action just keep going up over here. And now if the GDP matches the forecast 0.7%, it indicates steady performance with no surprises, and market reaction may be limited unless driven by broader risk sentiment or US dollar movements. The NZD USD could remain range bound. If GDP is lower than forecast, below 0.7%, it suggests economic momentum is fading, and it increases the likelihood of a more cautious or dovish Reserve Bank of New Zealand stance. And this is likely to weigh on the NZD and pull the Euro USD lower. So the overall analysis is the June 18th GDP key release that we get for the NZD USD traders, with growth expected to hold at 0.7%. A surprise in either direction could trigger meaningful market moves. In addition to the headline figures, investors will pay attention to performance in key sectors like agriculture, construction, and tourism. So the key takeaway for the NZD USD currency pair is that if the GDP number that we get in New Zealand if it's above than 0.7%, then expect NZD USD currency pair to rise up more. And if the number comes below 0.7%, then that's bearish for the New Zealand dollar. And this also means we could expect a drop inside NZD USD currency pair. So the conclusion is the upcoming New Zealand GDP report on Wednesday, June 18th, 2025, is set to guide near-term direction for NZD USD pair. A solid print could renew investor optimism and strengthen the Kiwi dollar, while weaker data may heighten concern about slowing growth and weigh on the pair. Traders should also monitor global risk trends and US data for a broader view of currency market dynamics. Okay. Next one is the official bank rate in UK. So, what is the official bank rate? Well, the official bank rate is the benchmark interest rate set by the Bank of England. It represents the rate at which commercial banks borrow from the central bank and is the Bank of England primary tool for controlling inflation, influencing consumer spending and managing overall economic activity. Changes or signals about future rate moves significantly impact the British pound. A rate hike tends to support the GBP by increasing yields and investors' demand, while a cut or dovish stance may weaken the currency. Now, the previous number we got is 4.2%. The forecast is also 4.2%. The actual data did not release yet. So the market broadly expects the Bank of England to keep the official bank rate steady at 4.25% in the month of June, following recent signs of easing inflation and mixed economic growth indicators. While no change is anticipated, the tone of the Monetary Policy Committee statement will be closely scrutinized for future guidance. So the possible scenarios and the impact on GBPUSD would be if the BOE hikes the rate, above than 4.25%, that signals the inflationary pressure are more persistent than expected. So surprises in the market and boost the GBP sharply. GBPUSD likely surges as rate differentials favor the British pound. Now, if the Bank of England holds the rate at 4.25% as forecasted, so it matches the market expectations. So the immediate impact may be muted. Expect a sideways price action inside GBPUSD currency pair, and the attention will shift to the tone of the MPC statement and vote split. If the tone is hawkish, the GBPUSD may still rise modestly. If dovish, the pair could soften. If the BOE cuts the rate below 4.25%, then strongly dovish surprise signaling economic weakness or sharp disinflation. And this is likely to trigger a GBP sell off and push the GBPUSD lower. And this could reinforce expectations of a prolonged easing cycle. So the overall analysis is, while the consensus is for no change, the real driver for GBP will be Bank of England forward guidance. Trader, you should watch closely and you should examine the vote breakdown among MPC member, any revisions to economic projections and comments on inflation, growth and labor market trends. So the key takeaway for this report is, if the rate hike or hawkish hold, the GBP USD strength and the price action is going to rise up more inside the GBP USD currency pair. And if we get a dovish hold or rate cut, then GBP is going to become weak and expect a drop in price action of GBP USD currency pair. So on June 19th, 2025, Bank of England rate decision could spark volatility in GBPUSD even if the rate remains at 4.25%. Markets are on alert for signs of a pivot, especially as inflation trends lower and the economic outlook softens. As always, commentary from Bank of England Governor Andrew Bailey and the MPC will be crucial in shaping expectations for the remainder of year 2025. Now let us take a look at some charts. So we're going to talk about the current week global market trends: Euro USD, US dollar, Swiss franc, JP USD, and spot gold. Let us start our analysis with the Euro dollar currency pair. So as far as the weekly time frame is concerned, the RSI is overbought over here, and price action just keep trying to rise up, and it looks quite bullish over here. If we go over to a daily time frame, same scenario, it looks bullish. Market just keep trying to rise up. We got some spikes over here which suggests that we could get a short-term drop in price action of euro dollar currency pair. And price action, it might try to move sideways and we might get a pullback in price action. Okay, maybe below 1.1472, but we need a breakdown below 1.1371 level. If it happens, fine. Otherwise, expect further upside inside the euro dollar currency pair. Same goes with the US dollar Swiss franc. The USD Swiss franc, it's oversold. And if you check out this chart of this daily chart, we got some support over here. Market might go a little bit sideways and we might actually get a pullback in price action above 0.8239 level. Next one is the GBPUSD currency pair. GBPUSD currency pair, the trend looks bullish. RSI is oversold. It's above the 70 level inside the weekly time frame. If you go over to a daily time frame, price action just keep trying to rise up further. And if we go over to a 4-hour time frame, just to check out this chart over here, you see we got this as probably wave A, B. So market is probably going to drop more. Okay, this looks a little bit bearish, I would say, and then expect further upside inside the GBP USD currency pair. Okay. Okay, next one is the spot gold. Spot gold, the trend is up. The long-term trend is quite bullish inside the weekly time frame. If you check out the daily, I told you guys that expect a top. Gold is trying to find some resistance over here. So expect a drop in price action inside the XAUUSD pair. The spot gold, it is an uptrend, but within an uptrend, we're going to get a pullback first before it resumes the uptrend. And it happens, if market is going up, it's not going to move up in a straight line fashion. You always get a pullback within an uptrend, and those pullbacks basically provide us buy trading opportunities to join an existing uptrend. Okay, that's pretty much it. And if you have any questions, feel free to type inside the chat box and I will be happy to answer your questions. So what we have learned today? Well, I discussed about the gross domestic product GDP for the New Zealand dollar, and we also discussed about the official bank rate, interest rate, I mean, for the UK. Then we also looked at the euro dollar, US dollar, Swiss franc, GBPUSD, and spot gold pairs. These are the assets you need to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages to stay updated with true exciting events. Trading content is there and market insights is also there. If you are interested to learn more about trading, check out the Trade Geek website, and you can access free trading courses for beginners, intermediate, and expert traders. So I would like to say thank you for hanging around. See you at the next trading webinar on Tuesday, June 24th. 2025 at 12 p.m. UTC time. So that's it for the time being from my side. Have a nice day and bye-bye.